Hi there YouTube. Today I wanted to talk about one of my favorite companies to invest in at the moment. That company is Canadian Solar, stock ticker CSIQ. So let's jump in and take a look. Canadian Solar, as you might have guessed from the name, is a solar business, and there are many types of solar companies. They each do slightly different things. For example, some of you might be familiar with SolarEdge, and that's a company that's fairly famous for its inverters. Or perhaps you know a bit about First Solar. That's a company that's better known for its solar panels. Now, Canadian Solar is a company that's involved in a number of different areas of solar. They create inverters, modules, system kits. They run projects for utilities or companies. As an example, you might be a government department and you want a solar installation to power your business. Then you might get SolarEdge to supply everything and do it for you. And whilst the company started its existence as a business that was creating solar panels and later inverters, it has now stuck a finger in the energy storage pie, which is an area of solar energy and energy overall that is very, very fast growing. The business has been around since 2001. It started in Canada. The chairman, the founder of the business, is a Chinese gentleman, and the company does have deep ties in China. What I really like to do when I'm digging into a company, although I know CSIQ quite well by now, is go to its Wikipedia page, and that gives you a pretty good overview of the business, the good, the bad, and the ugly. So here you can see the products that they sell and the projects that they have going on, or some of the projects that they have going on at the moment. One thing to point out, a big development through the past quarter, is that Canadian Solar was able to list a subsidiary on the Shanghai Stock Exchange. This is something that's been going on for quite a while. IPOs within China have been highly scrutinized, and CSIQ has finally managed to list this company. And I think in the process they raised, I don't know if I have the slide up, but I think they raised $975 million in the process of taking this company public. Just to give you a little bit more info into what CSIQ does, it does a lot more than what you see on screen, but they are involved in a lot of manufacturing as well as selling the things that they manufacture, obviously. But a large part of their business is also around project development. So they don't really sell to the end consumer very much. Their target market, in fact, are businesses, not necessarily just utility companies that provide energy services, but any type of business, as well as governments. One reason that I like the business is because of this aspect. When you are selling to end consumers, the income from each project tends to be quite small, so you're looking at getting high volumes of customers in order to make more money, whereas when you're selling to businesses, you tend to make a lot more money per project. Those companies tend to have deeper pockets, so the revenue ends up being a bit more predictable. I also wanted to highlight just how large this company is. So you can see that they have a footprint in a number of countries worldwide. This is not some fly-by-night business. They are operating all around the world. They sell a number of different products. They are well diversified geographically, as well as in terms of the solar products that they sell. Now, the reason that I want to talk about Canadian Solar right now is because we've just seen an earnings report which has given us a lot of information, a lot of new information that we can scrutinize. The other thing is that the share price dropped quite dramatically on the back of this earnings report. And whenever this happens, we'll want to know what caused this within our business. And is it because there's a fundamental flaw and we need to pull our investment out, or is it something more short term? Now, what we can see from the summary that I have pulled up on screen is that the EPS beat by $1.05. That's nearly 100% beat on the expected amount of profit that the company would make. However, they did miss on their revenue number, roughly 2.2% year on year. But the thing that really caused the stock price to fall was the fact that their outlook for revenue for the quarter to come was 1.9 to 2.1 billion when it used to be 2.5 billion. So they'll be making roughly 20% less revenue in the next quarter versus what they had previously expected. Just how dramatically did it fall following this development? Well, you can see in the 3 sessions that followed this earnings report, the share price dropped nearly 14%. Now, the most important question here is this fall in revenue because of some major flaw within the business? And the answer is no. There are hints that something interesting is going on. Now, I don't have all the details up, but the fact that the company missed on revenue for the quarter just gone but enormously beat in earnings, that's profitability, tells us that although the company saw a drop in the sales number, they were able to squeeze more profit out of the money that they made. The key reason behind this is that during lockdowns, the prices of components that went into solar panels and solar equipment went up dramatically. This meant that the cost of business for solar businesses became a lot more expensive, and there was a major squeeze on margins. Companies raised their prices in order to offset some of this, but now they're finding that the opposite is happening. The things that they need to buy in order to make the products that they sell, the prices of those things are coming down, and they are able to pass these savings along to their customers. So whilst the revenue that they are making is falling because they are able to make their products cheaper, the prices that they pay for the things that they need to make their products is falling even faster. With this knowledge, we know that the drop in revenue is not a red flag, at least not at this point. If revenue is dropping, but margins are improving and earnings are coming in at record levels, then I think we're okay. I think a large part of the market realized that the sell-off was enormously overdone, and we can see that since the lowest point of that sell-off, the share price has risen 9% or so. So the company looks pretty solid in terms of the historical data that we have. What about the future? What's going on for Canadian Solar, as well as other solar companies? One of the other advantages of doing business with companies versus consumers is that you have a lot more visibility into the work that is coming down the pipeline. And it just so happens that Canadian Solar has an enormous project pipeline across the entire globe as of right now. What about beyond the pipeline of work? A pipeline is usually 6 to 12 months out. Both solar energy as well as energy storage are two enormous areas of our global decarbonization effort. On the left, you can see that solar PV annual installations are expected to grow at 13% annually, which is fantastic. And the younger area of energy storage is expected to grow even faster, 27% annually. So combined across these two areas, there's a lot of growth ahead for Canadian Solar if they can get things right, as well as other solar players. So the question is, can Canadian Solar get it right? They seem to have been doing okay so far. Will they be able to do it for the next 5, 10, 15 years out? And if we look at the historic numbers for this business, we can see that it is looking pretty cheap given its current share price, and the prospects seem quite strong. Looking at revenue through the past 5 or 6 years, you can see that the company has been able to grow its revenue at 17% annually. We can also see that EPS growth has been quite strong, especially within the past few years, and it's forecast to be quite strong going forward. There was some weakness between 2019 and 2021, and part of this was because of the global lockdowns and the effects of rising costs on businesses like Canadian Solar. The company has a lot of cash in the bank, partially due to the listing of that company in Shanghai. Debt is at a reasonable level, especially if you look at the historical debt levels of the company. And if we look at the book value of the company at nearly $2.5 billion, we can see that it is quite a lot more than the current market cap of the company. We already know that the growth in earnings seems to be faster than the growth in the PE ratio. The company is actually just trading at a PE ratio of 5 at the moment. And given the recent history of the company, we know that it is a high quality business. Their return on capital and return on equity are fantastic. This is a company that knows how to take money and turn it into more money through the products and services that they sell. So it is for these reasons that I find Canadian Solar a compelling investment. I've increased my investment in the company recently. I think I might continue to do so through the next few weeks and months. It is a high quality company that's been run very well for 2 decades. It operates in an industry that is going to experience strong growth through the next decade, maybe 2 decades. The numbers for this business look great. Revenue growth as well as earnings growth have been very good, particularly earnings growth. Margins are expanding. And given everything that we know about this company, the share price is looking quite cheap right now. All right, I hope you found that useful. I'd like to do more of these types of videos because I quite enjoy them. I'll speak to you soon. Have a good week. Goodbye.